Stephen here from Share Navigator with a stock market update on May the 7th. So before I get into the update, just to let you know, in the members area under the watch lists, all the stocks now have been updated with new target prices. So your UK, your US and your European equities have new target prices post earnings. So they're all up to date. So if you're holding any equities and you're looking for target prices, you can go in and have a look there in the members area. So we're just looking at the S&P 500. You can see yesterday it broke above the 50-day moving average. So a big jump up day on Friday because the weaker than expected non-farm payrolls, and there was follow through yesterday. So the bulls will be delighted with that. Those of us like me who are holding short futures ain't so happy. So what I'm going to do here, guys, just to let you know on the short futures position, is I'm going to put in a finance bull call spread at some stage this week, just in case this continues. Now, I'm not going to do it today, and potentially not even tomorrow. I'll just wait and see how the market plays itself out, just in case, to protect us from any upside risk here. And then on the other side of it, just as an update, I would not be as confident anymore that this low that was put in about 2 weeks ago is going to be taken out either. I would suggest that potentially it might revisit this area, and at that stage hop off the train and take the profit off the table on our existing short futures position. So it's important just to note there that we will be probably taking that short futures position off a little bit higher than what we had originally anticipated. Just in terms of the momentum indicators, you can see the shorter term 5-day RSI is now achieved oversold. So the bears will be, I suppose, clinging onto that, hoping that that turns back down and there's a bit of short-term profit taking that goes on. And then on the longer-term RSI, which is over 14 days, that still has a bit to run till it actually got to the oversold area. So this could really go either way. This is a strong sign, such a strong move above the 50-day moving average. Having said that, just to bring you back over history, this has happened before. There's an example of it there. There was a bit of follow through after it, and then we eventually turned back down. So on several occasions, it's not the holy grail, something breaking the moving average, that it can't break back down below it again. But it is a positive sign for the bulls there. So just to be clear on the message, for those of us that are holding short futures, to put in a bit of protection here, a finance bull call spread will be applied at some stage this week, unless we get a sudden reversal in this. And then in terms of taking the short futures off, 4950 is now really the target area to take that off. For those of you who don't want to wait around for it to get down there, you could sell a put, maybe at 4950, take in the premium while you're waiting, and there's nothing wrong with doing that either. But I'll let you know what I'm doing later on during the week, and that message will go out in the WhatsApp group. Just looking around at the NASDAQ, for example, you can see that performed pretty much in line. It's a very similar chart to the S&P 500, broke above its 50-day moving average as well. And then, of course, the IWM outperformed. Now, you'd expect that if the bond yields are starting to come in. So again, I'm going to flip the bond yields now. And this is the reason why the market is going up. So you look at this move in bond yields since Friday. So that was your big down day on Friday in the bond yield. And that's because the weaker than expected jobs data suggests that the Fed might be more likely to cut rates. That's what that price is in there. And it's kind of stabilizing around here. So yeah, now to be honest, it's one data point, guys. So it wouldn't surprise me to see the bond market kind of turn back up and make its way back toward 4.7% again. But it's certainly a break in this significant move upwards. But at the same time, this is still in an uptrend and still above all its moving averages. So keep looking at the bond yields. Right now, it's a big win for the bulls on the equity market. But if that starts heading back above 4.5% again, you could see some profit taking coming in. And then looking at the euro dollar here, again, you can see it's pumping up here against the 50-day to 100-day moving average. Really difficult to trade this one. But my best guess is you're going to get a weaker dollar, because I do think that the ECB may not come along and actually cut rates as much as people anticipate, especially if their US counterparts aren't doing it. So for me, I think it's very difficult to trade and I wouldn't trade it, but I do believe, and I've been right so far, that we're leaning more towards a weaker dollar than a stronger dollar from here. So that's just a link in. So keep an eye on the 10-year when you're looking at equities. So just back to our active trader watch list. We've no stocks in it at the moment. So when we get high quality stocks that fit our criteria, we will put them in that watch list. Nothing there today, so there's no trades on there today. We don't intend trading it. And then our buy watch list has been updated all the time on stocks. So we've got about 33 stocks in there now with buy ratings on it. But we wouldn't be buying anything now. Again, we just want to make sure that this current correction in the market is actually over before we'd start engaging in buying equities again. So a lot will depend on how this market reacts this week, to be quite honest with you. Moving on then into energy. So our natural gas trade is going well. So we're not buying any more USO or UNG, depending on, NGASP or UNG, depending on what side of the pond you're on. We're just holding what we have. We wouldn't sell what you have, folks. Hold on to it. So now we're at this resistance point we talked about last week. This 229, 230, it kind of spiked up near there yesterday. A bit of a sell-off today. But it's going to test that again. If it breaks out there, then it's the 200-day moving average. And after that, it could be a run right up the tree on this. So we would hold those ETFs. You're going well on them now, but we wouldn't buy any more at this stage because you might get some profit taking going on. And then crude oil is now consolidating just around here. So last week, as the tensions in the Middle East kind of subsided a bit, we had this big kind of sell-off in oil, and it's now consolidating here. So it'll be really interesting to see, does that pop back into this up channel here? So keep an eye on that one. And then finally on the metals here, silver consolidating here after a significant run. We would continue to sell into any strength. And then if you look at copper, it's something similar here as well. Big push on copper and silver in the last number of weeks. And we would simply just hold on to gold. So we would sell silver and copper and hold on to gold at these levels. So just in summary, guys, kind of bulls will be delighted on the S&P, break above that 50-day moving average. It's not the holy grail, but it is. I'd rather be on that side of it than the side of it that I'm on at the moment. To put in some sort of a risk mitigation strategy, I'm looking at a finance bull call spread. So that will basically, if the market keeps going up, our short futures position won't worsen. So I'm looking at putting that on in this week at some stage, unless we get some sort of a reversal again in the S&P 500. So if it starts to break down again, I will probably hold off on that and just get out of that short futures position at 4950 or maybe even 5,000. I'll assess it at the time. So that's the kind of the latest update there on the S&P 500. Okay, guys, if you have any questions at all, please reach out, book a web meeting with me, and I'll be happy to talk you through anything. Okay, thanks and bye for now.